Well, good afternoon, everybody. It is Friday, August 18th. I'm Dave Weisberger, the CEO of CoinRoutes. It's time for our This Week in Crypto recap. And guess what? We got something to talk about. We actually have market movement, and it's actually interesting. So for those who haven't been paying attention, Bitcoin yesterday in a 5-minute period dropped around 10%. Actually a little bit more, and then it recovered a bit. And that has dragged most of the crypto market down an equivalent amount. Bitcoin for the week is down 11 or so percent. Ethereum is down almost exactly around 10%. Other XRP is down 20%. Other coins are down more or less similar amounts. And look, as we've talked about this before, it's not that surprising when you have that many weeks in a row with no volatility, Bitcoin volatility at all-time lows, basically. It encourages more reckless behavior. People believe that it's safer to go long on margin. It's safer to put more leverage. People put in tighter and tighter stops on longer term positions, thinking that they can actually take more risk. And so when a liquidation event happens, well, they all get flushed out. So let's talk about why, because I actually laugh about this. I was on the crypto town hall this morning and I made the point that when an action happens in a 5-minute period, don't tell me unless there's an obvious news story like, so a major world leader dies, war breaks out, some other, catalyst on a black swan or a white swan, like a Bitcoin ETF approval, anything like that. Unless there's a really obvious piece of news that caused a herd behavior to move the market, don't start looking at random stories to justify it. We'll talk about the stories in a second. But the interesting thing is it's exceedingly clear what happened. There really are only two possibilities, and we can see this in the data. So first, let's talk about the facts. First fact, the drop happened in less than 5 minutes. Now, on the chart you're looking at on screen, which is produced from CoinRoutes, you can see that the best offer, i.e. the offer on OKX spot of Bitcoin USDT, went well below the best bids on every other market and did so in a 5-minute period. This is a zoom in over the course of the day. It looks obvious. And you can see that it was spot led, and you can see it happen in a compressed period of time. That second fact, that it was led from spot market and led on OKX, is also very interesting and important because OKX is one of the safest markets to trade spot and perpetuals. And it's one that, frankly, a lot of CoinRoutes clients use, and we encourage others to do so because it's a relatively safe market the way they've done proof of reserves, etc. But the fact is, whoever did this trading, the trading was initiated on OKX. Other markets followed, of course, because of the arbitrage mechanism. The third fact is, and this second chart, which you're seeing, is of liquidations during the 24-hour period. The liquidations were largest on OKX and second largest on Deribit, where obviously players are there. So those are facts. We know that that is true. So what are the possibilities? Well, there's really only two possibilities. One, someone was mind-bogglingly dumb selling a large order. Possibility two, somebody made a ton of money manipulating the market in what I would call a momentum ignition strategy. And I'll explain the second one in a second. But just when I say mind-bogglingly dumb, I hear lots of people in the cryptoverse, and we talk at conferences and other places, and you ask funds how they trade. And the fund says, well, I do RFQs to my OTC brokers when I need to make a trade to reallocate portfolio. So if a major liquidation happened in a fund and they had to sell their Bitcoin, it is possible that they were mind-bogglingly stupid and either sold it all on the one exchange where they owned it, aka OKX, or that they called a bunch of Asian market makers who all knew that a big sell order was happening and ran in front of the order and knocked it down. Now, is that likely? Honestly, no. I tend not to believe there's that much stupidity out there. Look, we understand that CoinRoutes clients trade dramatically lower costs than any of these other mechanisms. But this was a special case. This, you had to be completely dumb to knock a market down 5 or 10% immediately when selling. I mean, I suppose the corollary to that could have been a fat finger, a trader who had a big order, who meant to put it in an algo or meant to put small slices into the market, might have just hit the button and said market order. Once again, would be pretty stupid. Maybe we'll find out. The most likely scenario, though, is momentum ignition. And for those who haven't seen me and talk about this, it's a very simple process. So basically what you do is this. You would on any particular exchange that trades spot and derivatives. What you would do is you would amass a large position. You would be buying spot and selling perps, and doing that to a large size, say $500 million, $350 million, some large size. Then what you do is you place bids in the perpetuals well below the market, scaling down. And then when you're ready and it looks like there's not that much liquidity left in the market, you market sell your spot and drive the price down. Now, what do you accomplish? Well, let's just say for the sake of argument, Bitcoin was at 29,000 when you did this, and you could drive it down to 25 and get an average cost of selling somewhere between 27.5 or so. You could do that. Now, if you put your first bids on your derivative position at 26.5 or and below, it's possible that you could literally make $1,000 for every Bitcoin that you sold versus covered in perps, almost without risk, if in fact there weren't hidden bids in the market. Well, if this was what they did, there were no hidden bids. They slammed the market down. They probably got filled on their perps. And even if they didn't get filled at the bottom, they were able to buy it well below the average price of the selling. Now, that sort of momentum ignition strategy, most major regulators consider illegal manipulation. But there is no providential regulator in crypto to actually say that it's manipulation. We don't have any of the major authorities looking at this, and most of the exchanges, because you could do this from one exchange to the other, it doesn't have to all be on one exchange, don't really have the tools necessarily spotted. Some have some tools of this. But the fact of the matter is, when you ask the question, why is it that the market would be better off if you had actual regulation, an actual principles-based regulation with the ability to look, preventing these sorts of things is a good outcome. Unfortunately, with the SEC approach of regulation by enforcement confined only to the US and chasing more and more overseas, these sorts of things can continually happen. So whenever you hear me say that the SEC approach is making it dangerous and harming investors, this is a large part of what I mean. What I mean is they are making it harder to implement regulations at scale that could potentially prevent, or at a very bare minimum, punish people who manipulate the market. But okay, we'll get off the soapbox on that. And let's talk about the first story, the one that laughingly people attributed the cause to. So there was a report in a footnote almost at the end of a Wall Street Journal story that SpaceX was writing down the value of their Bitcoin purchase and they had sold it all. Sure, they sold it all well before yesterday, and they were writing down the value of it as part of their accounting treatment, as part of their earnings. This is a nothing burger. This was, and it's a small amount too. It was like $350 some odd million worth. Who cares? They didn't sell it all in one button push yesterday. Or if it turns out that they did, then they were the dumb ones. But I don't believe that that's the case. But the problem is that pundits and talking heads always want to see significance when there isn't any. I'm telling you, when something happens within a 5-minute period, changes your entire investment thesis, your investment thesis is troublesome. I constantly talk about the fact that you shouldn't overuse leverage, and that when it comes to Bitcoin, it's really a long time horizon, extremely positive bet in terms of asymmetric upside versus downside. And there is no way that a 5-minute period of events, short of a world war or something that's truly apocalyptic, would change that thesis. Certainly a large sell order is not going to do it. And other people talk about Evergrande. No, that is a big story, and it might very well be a major contributor to a massive risk asset correction. But Bitcoin was the only one that went down, and it happened all in a 5-minute period. Once again, that's the kind of thing that would feed on itself and not stop so easily. So the fact of the matter is the pundits in the markets don't really care to be accurate. They just want to have something to say so they don't feel stupid. And this week was a classic example of that. The most important takeaway is the market is somewhat at risk whenever you get to these compressed periods of volatility. And just so you know, the exact same thing can happen on the upside. In reverse, you sell one and buy the other, but it doesn't matter. You can do the same thing. And the fact is, the more that funding is cheap and the more that leverage gets sucked out of the market, the more it will be, there will be no natural sellers if a bull run happens. If, say, for example, asset allocators decide to move into Bitcoin for, maybe a spot ETF approval or some other potential white swan event that occurs. Okay, Rest of the news stories. Let's talk next about the XRP case, because Judge Torres allowed the SEC, to file a appeal. Now, of course, this was misreported massively, as the appeal was accepted and they can go directly to the circuit court. Not true. Now, in the case of the block, they did not misreport it. They made it clear that she is allowing them to write the brief, and the brief has been submitted this afternoon. I'll confess to not reading it yet, but I want to be very, very clear about this. My friend John Deaton wrote an excellent post about this on X, the platform that used to be known as Twitter. And he basically explained that it was almost certain that this was going to take place. Because if you're sitting in Judge Torres's shoes, she wanted the ability to differentiate her ruling from the Rakoff ruling, and differentiate it along obvious grounds. I mean, first of all, the Judge Rakoff ruling, which called into question her original decision, basically was based on the fact that Do Kwon was being sued for fraud. And he was being sued specifically for misinforming people buying Terra Luna in the secondary market and getting a yield. So in his case, there are allegations of fraud. There's allegations he profited materially by misstatements, and there's allegations that he misled people who were trading. And the ruling was based on the perspective of Do Kwon, not on the exchanges where the coins were listed. And that's very, very different. In the XRP case, there were no allegations of fraud, no allegations of misstatements. It was specifically stated as such, and the perspective is different. Her argument was that if there is no allegations that they were promoting the product, that you shouldn't be able to tie secondary market sales of a non-security to being an investment contract. And Rakoff doesn't really dispute that. In fact, it is pretty obvious to me that whether she accepts or denies the ability to go forward with the actual appeal, she will want that logic on the record. And that's what a lot of my lawyer friends have articulated. And I think that's very, very clear. But as I said, John explains it very, very well. I urge anyone who's not to follow him and read what he posted. But there are a few other stories that are interesting and really haven't been covered that much because of all the major market action. And the first one that I talk about in other stories is Coinbase. Coinbase was actually approved to become an FCM, a futures commodity merchant. That allows them to now offer futures, U.S. regulated futures, directly to their clients. Now, I'm not 100% sure what the information barriers will be within the FCM and their actual exchanges, but it's very, very clear that Coinbase is willing to work with regulators and try to work through the regulatory system. So all the statements on that particular case the SEC has made about them is demonstrably false. And it proves once again the schism between different regulators in the U.S. On that schism, the whole notion of regulation by enforcement is anathema to many people. And that is exactly the point that Coinbase has been making in their motion to dismiss. Frankly, there's an excellent piece by Commissioner Peirce today on a totally non-crypto matter, talking about why regulation by enforcement is such a bad idea. But that's been a common refrain. Next story that I found interesting was Shibarium. Now, I don't want to get the Shib army screaming at me. I don't believe in meme coins. I think the notion of coins trying to capitalize on some ephemeral decision of value is like trying to capitalize on Beanie Babies and turning Beanie Babies into a world community where you can then use Beanie Babies as a currency to pay back and forth. I think Shibarium is more or less the same thing with Shiba Inu coin, but what do I know? Who knows? There is mimetic aspects of virtually any coin, including Bitcoin. Bitcoin's infrastructure is significantly more advanced, obviously. It has an enormous computer network, and there's a lot going for it. But what was funny about this story is that on their attempt at launch, they locked $1.8 million that was inaccessible, and it's kind of amusing. Look, I don't want to make fun of a community that's trying to build something meaningful when there really probably isn't a call for it, but it is amusing. These are the sorts of stories that are actually the best predictor of market tops in crypto, and crazy that a day later is when we saw this monster sell order thing that happened. I don't believe they're related, but it is kind of amusing. Next, we had yet more FUD from banking regulators. In this case, the FDIC produced a report talking about how crypto creates risks to the banking system. We've covered this ad nauseum, and I really don't even want to give it airtime, except to say that crypto is very small and the banking system problems are very large. And while it is true that any bank that is dependent upon more volatile deposits is going to potentially have a problem, it's really as far as it goes. But it kind of points out the ongoing campaign to try to defend the incumbent elite banks that extract enormous amounts of economic rent and keep millions, billions of people around the world unbanked against crypto, and how they've co-opted almost every regulator that's out there. It's just an ongoing story. Last two quick stories, a bad one and a good one. The bad one, Primetrust. We knew in June that the regulator said they were insolvent. Well, this week they said, yep, we're insolvent, and they filed for Chapter 11. Now, I don't really have a whole lot to say about this. I think at the end of the day, if as the strong rumors are true that they lost access to client wallets because they lost keys, their job as a custodian is to hold on to those keys. In the old quote, they have one job. They couldn't do it. Well, in that case, they probably deserve to fail. That's sort of like a bank who throws open their bank vault, puts signs saying, here, steal my client's money, and yeah, the bank goes bankrupt. Okay, in that particular case, the bank deserves it. This is almost that bad. So, c'est la vie, Primetrust. But on the flip side of custodians, BitGo announced this week that they raised over $100 million at a pretty hefty $1.75 billion valuation. And that just goes to show you something that's really important about crypto, which is even in the worst funding market, the bottom of a bear market in funding, that businesses that provide value and infrastructure and that will become scalable to the institutional world are valued. And that is important. So on that optimistic note, I'm going to end it for today. I wouldn't be surprised to see more volatility in the coming weeks, but we shall see. In any case, enjoy your weekend, everybody, and stay safe out there.